Okay. So yeah, I told us we are going to learn a strategy today, and the name of that strategy is ID50. I believe that most of us have come across the trade. Some have come across the trade, some have not come across it. So I will try as much as possible to be very brief on it. Probably on Wednesday we'll talk more on it. I wanted to bring out this is a trade plan for ID50. ID50 is one of the strategies that is used in the market maker method. Market maker method. So ID50 is known as intraday 50. That is what ID50 stands for. That stands for intraday 50. I believe we have mastered the moving averages that are in that template. I believe by now we have mastered it. So I would want each and every one of us to start from today to start looking for this trading style. Now, it is very simple. The only difficulty is when you don't follow all the rules. If you look here, you see that there are 6 rules to follow. There are 6 rules to follow. So the only difficulty you will get in this trading. Should I tell you something? Ramon to be tired. Mute yourself. Mute yourself. Thank you. So the only thing that is difficult is when you miss any of these rules. Now it is very simple. Rule number 1 says anchor present to the left. Your anchor will always be at the left. Your anchor will not leave the left and be on the right. No, your anchor will always be on the left. Then the second one says your 13 and your 50 EMA, that is the ketchup and water, must cross. There must be an angle of separation. When I say angle of separation means something like this. You have a W, that is on this thing, and the moving averages. Please mute yourself. and you have the moving average crossing this way, and you have an angle of separation here. It's not when the moving average is together. No, it must cross well so that there will be an angle of separation. All right. So your 50 and your 13 EMA, that is the ketchup and 50 EMA, needs to cross. Then this is where it gets interesting. After your 13 and your 50 EMA have crossed, the first pullback of price, the first pullback of price to the 50 EMA, and it has to be between 25 to 50 pips. You should note, anchor to the left, 1350 EMA cross, the first pullback of price to the 50 EMA, and it has to be between 25 to 50 pips. It's going to make you to lose a lot of trades. Sorry, not lose actually. It's going to make you to miss a lot of trades. Now, will it hurt you? No. It's not going to hurt you. It's only going to hurt you when you don't play by the rules. What this rule will make you is to get quantity trades. Quantity and quality trades. Quality, number one, not quantity. Because it's very possible you might not see a trade set up from Monday. On Friday, you will see it and you cover your weekly goals. All right. So first pullback of price to the 50 EMA, and it has to be between 25 to 50 pips. Now, if that move back to the 50 EMA is a very quick one, better. If it is a quick move and you are seeing it like, hey, they are selling, they are selling, they are selling. If it's a quick one back to the 50 EMA, it is very much better. So now, after this quick move to the EMA, what are you to do next? You have to wait for price to bounce off the 50 EMA or trap through the 50 EMA. And what does that mean? You have your candlestick pattern going up, going up, going up. Then you have your, let's use another color. Let's use, okay, you have, let's use this for, you have your 50. Then you have your ketchup. Because this one always follows price and this one gives gap. So at the end of the day, this market bounce goes down to this EMA. Sometimes you allow it to get to trap through before going up. Remember, he said you should wait. You should wait for what? Price to bounce or trap through. This is a trap. This is a trap. This is a sharp move to the 50 EMA and sharp move out of the 50 EMA. So it's either it bounces or it traps, just like it did here. Just like it did here. All right. So you wait for the EMA to bounce or trap off the 50 EMA. Now, after that, what is your entry signal? Your entry signal is railroad track, which is known as engulfing. The evening star or the morning star, then cord of wood or shift candle, which closes below or above, depending on where you are looking to go. If you are looking to buy, this candle should close above the 13 EMA. Any of these candlestick formation here should close above the 13 EMA. Now, after that, your last confirmation is what we call shark fin. We call it shark fin. Shark fin. Now, what is shark fin? Shark fin is, you remember the RSI line? I told us the RSI line is usually black in color, and the signal line is usually what? Red in color. So you have something like this. Then you have your blue band, your market baseline, so when you have something like this, that is when you should consider entering the market. This right here for sell, this right here for buy. Remember, shark fin is outside the band, inside the band. That is shark fin. You see, outside the band, inside the band. That is shark fin. So when you see the RSI line and the signal line cross in line with where you are looking or anticipating the market to go, that is your setup. That is your signal. So let's head on to the chart so we can look for it. I hope we are following. I hope we are following. Leave a 1 on the chat box if you are following, please. Did you, so far, Princess, did you understand these things that I spelled out here? Okay, good. We are going to look for it on the chat box. All right. Good. Let's look for it on the chat. Sorry, let's look for it on the chat now. Good. Now you remember. So who can tell me the first rule of ID50? Somebody should tell me the first rule.
Anchor to the left of the chat.
You don't necessarily need to unmute yourself. Just type it on the chat box.
Okay.
Anybody there? Anchor to the left. Nice one. Now, okay, there's something I forgot to tell us. This applies on M15 time frame. That is where this strategy applies on M15 time frame. That is where this applies on M15. So you go to your M15 time frame. Now, how do you know that you have an anchor? How you know that you have an anchor? Yes, only on M15. Only on M15. It happens on M15. I want to look for a good example of ID50 strategy. Okay, this one here. Perfect. This one here is a good example. But this thing that happened on F15 can also happen on 1 hour. But the difference is that H1 is called H1 50-50 bounce. Why on M15 it is called ID50. On M15, we use the 13 and 50 EMA. On H1, we use the 13 and 50 EMA. This is strictly on the time frames respectively. So H1 50-50 bounce is meant for H1 time frame. Then ID50 is meant for M15. So if you look here, between 18th October to 19th October, that is the 2 days. I believe this will be on a Monday and this will be on a Tuesday. Now see what happened here. They gave you an M formation. They gave you here an M formation. And what did they do? It started going up. Now, at the time of going up, what happened? There was a crossing at this point. You see when the ketchup and the water changed direction. So the ketchup stopped being under. Instead of being under, the ketchup started being on top, and the water started being under. Remember, angle of separation. So the first rule is what? Anchor to the left. The second rule is 1350 EMA cross. What is the third rule? Anybody? Third rule, type on the chat box. Third rule, type on the chat box. Yes, good. Pull back to the 50 EMA. All right. First pullback. Nice one. If you look after this cross, and you have that angle of separation, the first pullback. This was the first pullback. This was the first pullback. Then the next rule is what? What is the next rule? The next rule is what? Nice. The next rule is wait for price to bounce or trap. You can see how the market, trapped through this EMA here. A quick move downwards, a quick move upwards. That is a trap. Now, after that, what did they say is your entry trigger? What did they say is your entry trigger? What did they say is your entry trigger? Railroad track, good. Star formation, good. What else? What else? Cow, cut of wood. Good. Now, you see, in this case, we are looking to do what? To buy. We are looking to buy. So it does mean that we are anticipating this market to move and close above the EMA. Now, did you see that quick move down and quick move up? It closed above the EMA. Did you see that it closed above this 13 EMA? This is a railroad track. The next candle did not take it out. The next candle did not take it out. And we had a second leg. We had a second leg. We had a second leg. We had first leg up and second leg. They use this to complete this. So we have 1, 2, closing above this. All right. So this would have been your entry trigger. Now, after that, the last but not the least, shark fin. Outside the band, inside the band, outside the band, inside the band, outside the band, inside the band. We call it blood in the water. Now you see that there was what? An RSI and signal line crossing. This RSI that used to be under the signal line changed here and started being up the signal line. So did you see how you would have eaten not less than from here? You would have taken about 94 pips on M15. For how many pips stop loss? 21 pips stop loss. This is more than 1 to 2. This is more than 1 to 3. So that is it for ID50. Let me see if we can see another example. There are lots of it that we'll see from the past. Good. This one too is a very good example. You see how you had 1350 cross here. We had that 1350 cross. We had that 1350 cross. We had that 1350 cross here. So the first pullback to the 50 EMA. This closing above the 13 EMA. This, remember, shark fin. Outside the band, inside the band. TDI crossing. And another thing you need to add to that is, whenever you want to buy, you must make sure that the TDI, the shark fin, is above this fixed 50. We call it fixed 50. You see these dotted lines here, the dotted middle lines. That is S50, static 50, or fixed 50. Is it that you call it F50? Is it that you call it F50, or you call it S50? So it must be above. If you are selling, it must be below for that confirmation to be complete. So let's see if we can see. Maybe the sell. Nice. This one was a nice one. You see? Here, we had an anchor, remember, an anchor to the left, 1350 crossing. After 1350 crossing, pullback, first pullback to the 50 EMA, right? If they give you a chart pattern, perfect. That is good, showing you that there is a rejection in that price zone. All right. Now, after that, 13 EMA crossing, 13 EMA closure. You wait for the price to bounce off the 50 EMA or trap through it. You wait for the price to bounce off or trap through it. then you have your 13 EMA crossing. So you would have taken that trade. You would have taken that trade. That is 104 pips against how many pips? Against 20, against 30 pips. So this is more than 1 to 3. This is more than 1 to 3. Now you see blood in the water, shark fin. You see that shark fin, and you see that the TDI is below the static 50. And you see how it's actually rejected in this place. Now, what do we have here? What do we have here? You see that line? You also see it here, where the line crossed. The line crossing the TDI, also indicating that price has closed below the 13 EMA. So that is it, guys. Does anyone have questions to ask? Does anyone have questions to ask? Does anyone have questions to ask? You can unmute yourself and ask. Does anyone have questions? Okay, so if you understood the little I explained here, please type a 777 for me. Are you guys sleeping? Okay. Okay. Nice one. Is it only 3 people that understood it? Nice. I'm going to stop this recording.